Hello and welcome, South Florida. Welcome to another live edition, the ATM edition of the Real Estate Show, South Florida's #1 program about real estate and America's longest running daily radio show, all about the topic of real estate. And my name is Eric. I'm the host. I'm known as the voice of real estate here in South Florida. I'm the founder of this show 25 years ago and the creator of the automatic landlord system for owning cash flowing real estate profitably and hassle free. So this show is a virtual real estate seminar in every episode, and it's the only show that puts money back into your pocket. And we got a great show for you today. I've got a lot of new stuff. I've been promising you this all week long. But here's the question. Did you know that assessing your financial readiness to buy is a crucial step in the real estate process? And that's why we've been talking about this as being step #2 in the process to successfully buying real estate. And today's Thursday, which means it's our ATM edition, which I affectionately named after the criticism of people using real estate as an ATM. But more importantly, it's really ATM about the money. And that's what we're going to talk about today. We're going to discuss why now is the right time to buy real estate, focusing on this step of becoming ready. Before I get started, I just wanted to remind our listeners that we have workshops throughout the week. Last night, we had a great workshop. We had a fantastic workshop, as a matter of fact, which we call the Financial Edge Academy. And we're building a community of street smart, money smart individuals. And we were introducing, in fact, we kind of relaunched our keys to home ownership. Now, with what I'm about to do next, it's going to take it to a whole new level. So what I want to do now is I want to introduce my mystery guest, the guest that I had announced earlier in the week that's going to be joining me today. This is a gentleman I met at an event for folks that were starting hedge funds and money funds. And so we're talking about a pretty high level, sophisticated group of people. And so I'm going to introduce to you now I consider now my friend but colleague, Romeo Sykes. He's a seasoned real estate investor, been on many stages before, specializes in foreclosure auctions. And when you hear what he's done over the last few years, you're going to understand why I was excited to bring him on with me. And so his specialty, foreclosure auctions, and we're going to talk about there's more than one kind of foreclosure auction that most people think about. We're also going to talk about distressed properties, what that really means in today's marketplace. So without further ado, my good friend, Mr. Romeo Sykes. Romeo, how are you doing this morning?
Eric, it's a pleasure to be here. Always looking forward to doing business with you. We met at a huge event for raising capital, which was the Brad Blazer event where he had raised 2.5 billion and he's looking for other fund managers to help them raise in the billions also. So you and I are of like minds. We want to do the best we can in real estate, and now is the best time to get involved in real estate investing. And I don't think there's been any other better time, because just like the 2007, 2008 foreclosure wave, the next wave is coming from the COVID era. And when that wave comes, if we pre-positioned ourselves, think about surfing. If we position ourselves before the wave and we're set up, we're going to be able to profit so greatly from this wave that it's going to be incredible. So thanks for having me here.
It's a pleasure. And we're going to have some fun today. You bring up the COVID, and so many people are quote unquote over the COVID. And so we might call this the post-COVID wave, okay? Because what a lot of people don't understand is that we had artificially low rates for so long. And some people got a little bit too used to it. But there was also a lot of business post-COVID that just started, and they got into financing arrangements, which were temporary. Many of them 3, 5, 7-year type financing, which means that there's a lot of turnover that's going to be happening over the next several months. There's also, because of the impending, or they keep trying to talk about this recession, which isn't really here, it's very limited. But if it comes, that also could create a tremendous opportunity for real estate investors out there. So, Romeo, you've been making waves in the real estate world. Tell the listeners a little bit about your background and in particularly some of the success that we were talking about earlier with the distressed property investments.
I'm a little older. I'm in my 50s, And that's given me a little bit of a seasoned view on several things. And one of those views are, what is the most amount of income? What is the most amount of profit that we can make in the shortest amount of time? Which is once again why I met you at that building a hedge fund event and raising a ton of capital. Because what I've discovered is that there is a subsection of foreclosure investing at the auction, which is called homeowner association liens. And it's incredible because they have three different positions. You have your taxes, which is your first position, because that's the real truth. If you don't pay the taxes, you can get a tax lien against your property and you can get a foreclosure.
And
So
that
there's
a lot of people know about tax auctions. They've heard about it, tax deed auctions, and it's probably one of the red ocean most crowded places that would people who watch strictly the tax deeds. So go on with this area.
there's several stages of it, of let's call it the foreclosure or distressed property system that you can get involved in. The red ocean is tax liens. Now everybody's heard of tax liens, but what happens is they're first. Second is the mortgage. So if there's a first mortgage on the property, then the bank now really, if you don't make payments and the taxes, then that's why the bank always pays the taxes on the properties, especially at the foreclosure auctions, is because they need to catch them up. Otherwise, the taxes, the government can foreclose on the bank. So what
And wipe them
now?
out.
Yep. Now we have the bank as your first position. So once again, taxes, the government is above all that, but that's who is the superior. Then your first mortgage is where most people are going after auctions, and that's another red ocean. So there's tons of people, but right below that should be your second mortgage, and then your third mortgage and any mechanics liens. And once again, the auction wipes all those liens out. But sandwiched in between there, especially in the South Florida area, is your homeowners association liens. And this is what is so exciting, because if how to invest in these liens, what happens is usually, and here's a secret, this is something that is a tidbit for most people that they've never heard. When you're not paying your HOA bill, your homeowners association bill, usually you're also not paying your mortgage. And in the Florida area, but South Florida, if you have a house in a homeowners association area and that house doesn't get, let's say, the property management it needs because it's vacant, then the weeds will grow, the grass will get high, and you may have some high-end homes right around you that will bring the value down of those properties. So we can't have that. And if you know about the growth of vegetation here in South Florida, it's incredible. So what they do is they allow them to have a 90-day auction period where if you don't pay your HOA for 90 days, then the HOA can foreclose on the property for, get this, the cost of the HOA arrearance, which is what you haven't paid the HOA, plus your attorney's time for the HOA. That's what usually it's bundled up in, and they try and do that really quick. So what's exciting about this is that you may be able to pick up a property that has a 3-month or 6-month behind arrearage, and you're picking it up for $5,000, $10,000, $12,000. But there may be a property behind it, even if there's a mortgage on it and there's no equity, there may be a property behind it that they've stopped paying the first mortgage on also. So if you do this research and you find out that both of them aren't being paid, then the bank will come in and foreclose afterward. But the beautiful thing is, without any help, without any resistance, the bank comes in usually between a year, 2 years, 3 years after them, sometimes 5 years after them, where then they start the foreclosure process because it's such a big mill going on. Now, in between that period of time, you own the property because of getting the deed at the foreclosure auction. And I don't mean to be long-winded, but the secret is that there's no payments to make during that period of time because they were delinquent. And since it's delinquent, what our secret sauce is usually picking up the properties for no more than 6 to 12 months worth of rent, because we know for a fact that we can hold it for 3, usually to 5 years with nothing, no defense, no attorney. But with an attorney, we can stop the banks, do a short sale, or buy the note at a discount. And we have held the banks for up to 15 years while we're negotiating. All the while, we're collecting rents and we own the property until the bank agrees that it should discount it. And that creates a windfall of profits. A windfall of profits.
And so this is not theory. We're going to get ready. We got to take a quick break. But really quick before that, you'll be surprised at whose properties are involved in this. You picked up, for a lot of our true oldies listeners, they probably remember her name, Jackie Gleason, right? Famous, and he became a South Florida resident. Tell us about that little story really quick.
If you are in the golden oldies age like us, then that Jackie Gleason was an icon of society back then. He was friends with presidents, he was friends with movers and shakers. He was a true celebrity. And what he did is he hosted many great parties for presidents of the United States over at his Ivanary home. And like anything, a vacant house that doesn't get paid, the HOA forecloses on them. Out of the 336 properties, and get this, we picked up 336 properties, which we have the spreadsheet for 8 million. That's now today worth 223 million. And one of those houses was Jackie Gleason's. It was amazing.
So amazing stuff. And we're just getting started. So we got to take a quick break here. A few words from our sponsors. You are listening to The Real Estate Show, South Florida's #1 program about real estate, America's longest running daily radio show. And today I got a very special guest, Mr. Romeo Sykes, who is discussing with me some real interesting aspects. The market has changed, and that's what's important for people to understand. And with the market, there's new tools, there's new strategies, and there's new opportunities. And as we see the market and the economy start to rotate into a different mode, we got elections, we got all sorts of crazy uncertainties out there. And let me just tell you this, it's the uncertainties that create the opportunities for investors who are in the know. And so one of the investors that in the know is my good friend here, Mr. Romeo Sykes, who we share a common interest in obviously raising money for investments. And one little known area, often overlooked by very capable people, is the area of leveraging business credit. Okay, because once you have credit, and I can't emphasize enough how important credit is. Credit either costs you money or it makes you money. I've been saying that for a long time on the air. But today, bringing my good friend Romeo on the air, I'm going to show you what I really mean by your credit can make you money. And that's why you do want to work. Right now, you should be getting ready to always monitor, maintain, and improve your credit. And Romeo, let's talk a little bit about why. You mentioned something back in the beginning that piqued my interest, leveraging up to $1 million a year in business credit. That sounds completely too good to be true.
Well, you know what, Eric? I know what it sounds like, but being able to leverage up to $1 million in business credit is what the average person needs to be able to succeed. And if we go back 20 years ago, when I was first on stage, my first couple of times, I was recognized for doing a short sale where in several hours I made over $400,000, which put me on stage with the election time president, Donald Trump. I was in the same area as him about 20 years ago. It was 2004, and he was speaking as the keynote speaker at a Jacob Javits event in New York City, and we were at a Learning Annex real estate show, and he was the main speaker, and I was the person who learned how to do this type of real estate, and I specialize in pre-foreclosures also. And I was able to do a short sale, which made me over 400,000, which put me on stage right before Donald Trump, speaking about how to invest in real estate. So right now is the perfect time to speak about why you should leverage real estate. And now, how do you do that? You use business credit like all the wealthy people do. And I've analyzed the wealthiest people from a working class standpoint of view. And we see that we work for a living, while what they do is they use their credit. They leverage their credit from a young age. They open up corporations and they pay themselves a salary so they can continue. So if they have a failure, it wasn't their personal money, it wasn't their savings, it wasn't their 401k or their family money. No, it was a loan that they can always open up a new corporation and get more money. So leveraging credit is the most important thing. And getting $1 million in business credit, that sounds like a lot. With inflation, it's not. And if you're a business, that's small. And we would love to show you how you can leverage your own personal credit. If you have good credit and you're over 50, you're 60, you're 70, now is the time to be able to leverage that credit and be able to borrow using the secrets that we've learned. And we'd love to share with you, with Eric, uh, how to get up to $1 million or more with your spouse if you have good credit, to be able to use that credit to leverage into real estate, which is so exciting. And we've never been able to offer something like this before. And I'm proud to have Eric bring this to you. And we'd love to share how you can then take that money, especially if you can acquire 0% interest, and use that to invest in all types of investments. And the best part about it is you can invest in foreclosures also.
And that's a game changer as far as I'm concerned, that it's basically creating money based on your good credit, but really from nothing. And by raising that capital that you can invest into assets that create income, let's talk about the next area, passive income and returns, right? This is the name of the game. Everyone, the end game, right? The whole idea of retirement is to be able to not have to trade hours for dollars, not have to go to work every day, and basically own my time back, because that's the most valuable resource we have, so that I can do my pet projects, spend more time with my grandkids or my kids. There are certain things that we have high value that we want to spend our time with, but we can't because we're too busy making a living, right? We're too busy staying on the treadmill. Let's talk a little bit about passive income and how this that we're talking about, the distressed properties, the business credit, and how does that work together to create passive income and the kind of returns that allow people to have real financial freedom.
Eric, I appreciate you having me on your show, and I would love to tell you the secret that it's taken me all these years and millions of dollars to learn. The secret of the wealthy is credit. And most people think of money as in cash or gold or diamonds or oil or even Bitcoin these days, but it's not. It's how buildings are put up. They use credit, especially if you're looking to put up a 500 million to $1 billion building. It's how cities are put up. It's how the country was made. So realizing this, I delved into that credit, and I learned during all these events and seminars that I was at, why were people not successful? One, because they never had the capital, and they didn't understand because they were trading dollars for hours, which is their jobs. So if you have a 401k, stock, bond, mutual fund, that's all your years of hard work that you put into trading your time for cash. But what there is, there's an alternative. And what I figured out is why people fail most of the time, especially if you're going into your retirement, is that you don't want to be able to do the work yourself. So we've created a done for you system to be able to invest in foreclosures where you can truly become a passive investor. And this is exciting. So we can help you depending on what level that you're ready to invest at, and how aggressive or how safe you want to be, because this is almost a completely safe way to invest by using OPM. And that's what the wealthy people have always done, is use other people's money, but specifically the bank's money, to be able to succeed. And that's what we can show you how to do, is leverage your excellent credit to be able to get access to $1 million or more a year up to in business credit with you or more credit investor partners. That way you can protect your capital, especially if you've saved it for 20, 30, 40 years and you don't want your nest egg to go anywhere. And then you can use that to be able to invest in a done-for-you system, a completely hands-off system where we have the attorneys in place, where we have the system in place, and we're going to duplicate what was done before, but we're going to do it on a new level. And we'd love to do it with you in a way that's completely safe to your, I'm not going to use your cash, but now you use this credit that gets you investable dollars which allows you to now invest in a system that passively can pay you, whether it's yearly or if you want a higher interest rate, you wait till the end and you can get even more because we're growing it by buying more and more foreclosures.
So
All
one of the
done
hard
for
things about my radio show is that the time flies so incredibly fast. So what I want to do is I want to give our listeners an opportunity. You and I have discussed we're going to be doing a workshop very soon. In fact, in the next few days, and we would love to invite any of our listeners who are interested in learning more about this. We're going to put you on the list, and we're going to get you the information as we develop this, because what we're looking to do is to get a select group of investors together, and we're going to show you, we're not just going to show you, we're going to do it with you. Okay, because as Romeo mentioned, there are three ways to invest in real estate, right? There's the do it yourself, go out there, get the information, and be the pioneer in whatever area or whatever market. And as in the days of the pioneers, a lot of pioneers didn't come back with arrows in their back because they didn't know what they didn't know. But that's fine. That's a choice that people make. Then there's the done with you. Okay, that's when you sit on the shoulders of the experienced people who've already done what you're aiming to do. And so they are like your guardrails on a bridge. They keep you from going off over the edge, keep you on the right path, and allow you to accelerate because you've got those guardrails. You can actually do this faster through leverage. And so that's the done with you. And then, of course, as Romeo just mentioned, we also are creating a group where we're going to have investors who want this done for them. They want to learn how to do that. We're going to teach them. We're going to show them everything that we do. It's going to be an open book policy. However, it's going to be hands off because there's an old saying in real estate investing is that you can't steal in slow motion, and the best deals happen very quickly. And to be able to have the agility to do that, you have to have the ability to make the decisions. And so that's why there's those three different ways. But listen, we're going to talk more in detail about that when we get together in our offline workshop that's going to be dedicated just to this area of distressed properties and leveraging. We're going to talk about the special area that we mentioned before, the HOA liens and the HOA foreclosures. It's a niche market. It is one of the blue ocean strategies that not only is not as much competition, but when you know the technicalities. I once heard that the secret to walking on water is to know where the stones are. And all you have to do is to have the right team in place, the right knowledgeable, experienced, vetted, proven team in place. Then you're going to be able to get those kind of results. And you'll be on our list. This will be just an invitation only workshop. We're going to talk about this, answer any and all questions about this. So on that note, I want to thank my guest, Romeo Sykes, for being with me today. As we wrap up, let's continue to talk about why now is the right time to buy real estate, focusing on assessing your readiness, and how about putting your readiness on turbo, what we discussed today. So Romeo, thank you for taking the time out. As I know you're in motion traveling, thanks for taking the time out and sharing your knowledge here on this episode of the Real Estate Show. Join us in our workshops. They're there for you. Tomorrow's our Friday weekly wrap up, so don't miss that. I've got some other surprises for you then. Remember, it's a stone cold fact that real estate is the best investment out there, period. It's the ideal investment. So remember, share this show, let other people know. Sharing is really the opportunity to give and help others, which is what Romeo and I are doing here on this show. So once again, Romeo, thank you again. We will see you soon. Take care. Bye-bye.